The Dow's at, almost 13,000. That's a decent number, right? What about Dow 116,000? Could it happen? Should you care about it? Should you watch out for it? You'll probably be dead before it happens. We'll all be dead before it happens. But it's something we need to talk about because it gets to the heart of how you invest, what you look at as an investor. Chuck Jaffe is here with that story. Hey, Chuck, this was, I saw this yesterday on MarketWatch. This was one of the most read columns on MarketWatch yesterday.
Yeah, well, I think anytime you put Dow 116,200 in a headline, people are going to take a look.
Yeah, of course they are.
But let's point out that it's Dow 116,200 by 2046.
Right, so we got a little fudge factor built in there as far as the time. But take us through this, because this actually is this was a prediction from 1995 that you are now following up on, right?
It's a real live prediction and one of the most memorable speeches I ever attended. A guy named Bill Berger, and if you're of my generation and you grew up looking at Money Magazine and Kiplinger's Personal Finance, you used to see Bill Berger's ads all the time. It was this big bear of a man with white hair and a white beard. And he came to Boston and gave a speech to a group of journalists. And he had, at the time, he was 70 years old at the time, and he had been in the investment business for 45 years. So remember that, 45 off of 1995 means 1940. He started in World War II,
the end of the Great Depression,
et cetera. And he got the end of the Depression. And what he basically said is, look, he was talking about forecasts being fairly worthless. But he truly believed that the market would give in the next 45 years what it had given in the last 45 years. And if that happened, well, when he started, the Dow was under 200, and it had gotten to somewhere north of 4,500. And he said if you go from 200 to plus 4,500, then the same over the next 45 years would be from 4,500 plus to 116,200. And he said it would be by 2040.
Now, I mean, Bob, that seems like it just seems like an incredibly large number. But is it realistic?
Look, it is. I mean, it's stunningly realistic. And that's the funny thing, because 5 years after the guy had made the prediction, the Dow was at 10,000, and you would have been saying, oh, he's way off. It's going to blow past 160. That's when you were getting Dow 36,000. Then you get into the bubble and everything goes to hell in a handcart, and you would have thought, oh, it'll never get there. But here's what we are. We're 17 years into a 45-year period. 17 years in, he's basically on track. With the Dow at 13,000, well, let's do simple math. The rule of 115 is how long it takes for something to triple. So if you basically said at 6.75%, which is what we've had over the last 17 years, it would take 17 years from the Dow to triple from here, from 13,000 to 39,000. And if it triples again from there, that's another 17 years. Well, that would basically get you to about 117,000.
Chuck, I see the flaw I see in this argument, though, is that it's basically a function of the day that you're taking the measurement. So today, with the Dow at 13,000, we've made this X move, and you would have to triple, and you get to 117. But if we had made this same analysis back in 2010 instead of 2012, you'd come up with a completely different conclusion.
But that's actually the point. You're actually making what would have been his point. And mind you, if you read the column all the way through, it talks about Berger's 2 rules of forecasting. And his rule number 1 is basically for every forecast, there's an equal and opposite forecast. And his rule 2 is every forecast is wrong. So here's the thing. Over various times, if we had looked at his prediction, again, back when the market was going gangbusters, you would have thought he was wrong. Back when the market was in the tank, you would have thought he was wrong. And so you're right. It is the point in time, and the point in time that makes us look this week is that the Dow is at 13,000. So you're crossing a landmark, and you're trying to figure out, is this landmark significant? But remember, for everybody who thinks it's outrageous, that one, his historical view is about 6.75%, which is not what anybody thinks is totally outrageous going forward. And for everyone who says it's just a function of inflation, well, let's remember that inflation from the period he was measuring, so again, 1940 to 95, was about 3%. So even if you figured out 3%, the market is still outstripping, people saying, oh yeah, well, the Dow will be at 116,000, but a loaf of bread will be at $48 or $1,000. Not true.
Chuck, we have to leave it there. I appreciate it. Everyone go online. I advise you to go to marketwatch.com and read that one. It's a very good column.